Excited to see everyone. Looks like we got a good turnout for a Monday afternoon. Really excited about this month's Wealth Navigators topic. I've really created this forum so that we have an opportunity for like-minded individuals who want to think outside of the box, outside of the box of Wall Street, which we've all been programmed to do. I know I certainly was throughout my corporate career, and I really love this forum to be an interactive forum. So feel free to unmute. Love it. Your camera's on. I can see you guys. So I love to see you guys. Hey, Brett, great to see you. Just joined in. Feel free to interrupt, pop in the chat any questions you have. I like to keep kind of my piece of the content, if you will, to 15, maybe 20 minutes, and then really just open it up to Q&A. Our team, this topic in particular, I think it's a super important topic. It's early in the process of when we're looking for deals. Our team probably underwrites 50 to 100 deals, potential opportunities for every deal that we end up bringing to our investor community. And, we're really here, we're going to get kind of an inside look or show an inside look of how we evaluate these markets that we look in for investors. And along with, I'm going to share 4 major investing mistakes that I see some investors make early on in their investing career so that we can save everybody from having to make any of those investing mistakes. And when having conversations with investors, there's a lot of people that want to put their money to work in this current market, but we're not seeing as many deals pencil, and we're seeing the exact same thing. So what we found is a really solid market. And so I want to share that with you guys as we get to the end as well, the top secret market. And some of you may already know what it is. But before we dive in, quick disclaimer. This is purely an educational monthly meetup, if you will, Wealth Navigators. There will be no offering of particular deals or securities. I am not a CPA, a financial planner, or an attorney, so please consult all of your own counsel and advisors to make your own financial decisions on deals. As we dive into it, so really there's 3 different market types that I like people to kind of start. We start at the very high level initially to understand that there's primary, secondary, and tertiary markets, and none of them are good and none of them are bad. They all have pros and cons. So understanding some of the nuances of the primary, secondary, and tertiary markets is key. From a high level perspective, primary markets are really those markets that we all know the names of. Think of Miami. I mean, this is just a picture of Florida. I live in Orlando. Excuse me. So I picked Florida. But when we look at primary markets in Florida specifically, we're talking Miami, we're talking Orlando. Tampa is kind of a secondary market, but it's a growing market. And same thing with Jacksonville. But primary markets are largely those established markets. They've got large population bases, large GDPs, but they're also usually more expensive to get into, and they're really competitive. Whereas secondary markets are typically growing markets. I mentioned Tampa as an example, and no, these aren't the top secret markets. But Tampa is like a secondary market where it's got rapidly growing population growth as well as job market. And then tertiary markets are generally markets that have less than 1 million residents. They're smaller, but they may offer robust returns due to kind of strong migration and job growth. But again, they're not as competitive as you'll see on the primary and the secondary market. They're more affordable to get into. But conversely, they also typically will have fewer options when we talk about who our professional business partners are from a property management perspective. So there's pros and cons to every market, but this is one of the things that we will look at when we are starting to select potential markets. A big driver when we're just diving into looking at different markets is looking at where are the population growth trends. And the population growth trends, we're not just looking at the state, although there's a lot of conversations about the growth of the southeastern United States and folks coming out of California and New York and these, San Francisco, obviously that's part of California, but we hear that, and a lot coming into the southeastern United States. But we're not only just looking at the state, we're looking at the county level because we want to understand where in the particular states that growth is coming from. And so one of the investing mistakes that I'll sometimes hear investors making, or a limiting belief, is that they need to invest where they live, as opposed to being able to live where they love, but invest where it makes sense. So this map is just one of the examples of the sources of data that we'll look at, is looking at what that net migration trends are. And it's also important to understand, are they domestic migration trends, meaning people that are already within the country, where is everybody moving, versus people coming from moving into the country, so international immigration trends. This gives a great example of where people are shifting to and from. When we start to narrow in on particular locations that may be good markets, we'll want to also look at what are the economic drivers within the market. And we're looking at it for the entire population, but more specifically, we're thinking about our residents. Where are our residents going to be working? Is there an abundance of jobs? Is there job growth? And is there a variety of industries within the job market? This leads to a more stable resident base as they've got diverse employment opportunities. And it also leads to a better stable base, as it reduces our risk as landlords to not have all of our residents working within one particular industry that may be impacted if something happens that impacts specific industries. One good example, so this is looking at Atlanta. It's a deal we did last year. And in Atlanta, we got a lot of diverse industries. There's an abundance of technology companies in this area. Lionsgate, the movie producer, has also been continuing to grow their representation there. And they just announced earlier this year a $160 million project in building a new movie complex in the market. So again, looking at where are companies continuing to invest and grow, and that is one of the indicators that we definitely look at when we're looking at particular markets. Now that's from an employer perspective, but we also want to look at, are the towns and the states investing in the particular markets as well? So municipalities, are they investing for continued growth? And we see this in a variety of different incentives. They can be funding grants, or offering more ideal incentives for financing, as well as tax benefits and more favorable rezoning guidelines. And so this is something that, as we're evaluating markets and we're starting to kind of narrow in, we're doing research on what investments are the cities doing to invest in particular areas or redevelopment, or how are they incentivizing other developers to come in and continue to grow markets. Now, it's great when we find these areas with the population growth, great job kind of diversification, and then the municipalities investing in them. But what we want to also see is that we can support rent growth. So for those of you that are within the investor community and that have been on prior Wealth Navigator summits, we've talked a lot about how our traditional deals or our traditional business plans are value add business plans. We're going in and we are renovating. We're renovating interior units. We're adding operational efficiencies. We're looking at expenses and how we can reduce expenses without impacting the resident experience. It's really focused on how do we continue to grow the net operating income in order to drive value in these properties. And part of that is through rent growth. Rent growth is a big lever. However, rent growth really is the product of these three different pillars that we look at when we look at particular markets. We're going to be looking at the comp set. So what are similar type products within the close vicinity of the town, or if there's a particular asset that we're looking at, what are they able to command for the rates for their rents? What is their resident amenities that they have for the particular properties, and what are their interior finishes? Are they a comparable product that we can benchmark ourselves against? We're also going to look at housing supply in that market. And for generally speaking, if we look at a national average, we have a shortage of housing. When we start to look much more nuanced at particular counties or cities, we're going to want to understand the housing supply. And if we're looking at buying an apartment complex and there is 1,000 new units that are going to be coming on the market in the next year or two, we need to consider that impact of that on potential rental rates. Does that stall rent growth? Does that decrease rent growth? What does that do for the supply within that particular market? And we're going to look at it on the apartment side, but we'll also look at it on the single family housing side as well. And then resident incomes. So I think you'll see in every investor presentation, probably any market, any operator, you're going to see the competitive set, and then you may see notes on the housing supply. It is just as important to make sure we're looking at resident incomes. The standard requirement when we're vetting residents is that residents have a minimum of 3 times the rental amount as income to show that it's like affordable, it's attainable, it's more affordable housing, it's a reasonable price. When we're looking at particular markets, we are looking to ensure that whatever rent growth it is that we are anticipating based on the competitive set and the rental demand and inflation, that actual household incomes can support that. And so that's another important thing that we'll want to make sure we're checking not only for the first year or two, but even down the road during the business plan period. And I think this is one of the other mistakes, and I'll have a lot of conversations with investors will ask about the impact of high increasing interest rates on the apartment market versus the single family market. And so one of those mistakes is just thinking that these two markets are the same. They do operate very differently when we think about affordability and access to buying a house versus renting an apartment. It's important to make sure that we distinguish that they are two different markets. And in different areas, they will have different impacts on the affordability. The other key thing that we're going to be looking at when we kind of narrow down and we identify growth markets, we identify there's great diversification and employment opportunities, we identify that there is a demand for continuing to have the apartment housing, is really understanding, is that particular state, county, is it landlord and business friendly? At the end of the day, we all want to make money when we're investing in real estate. We want to make sure that we're setting ourselves up to pay our future bills, and we need to make wise investment decisions. And so part of that is understanding, do we have a favorable environment from a business and a political environment for our investment? One of those is for evictions, making sure we have a very straightforward eviction process, so that if we have residents who are delinquent, that we can go through the legal process in order to re-tenant the units. And then also from a tax perspective, making sure that we're getting favorable tax treatment from that standpoint. Some states have state income taxes, some don't. So as we're looking at making investments in various states, that is one of the things that we are also looking at to understand what that impact is on the business, and then ultimately what that impact is for our investors. All right, so that was kind of a really quick overview of all the different components that we look at when we're looking at potential markets to invest in. And one of the big things I wanted to share was kind of this top secret market that we're currently kind of looking at. This market was brought to us. It was brought on our radar by a very experienced operator who's actually already done 2 other assets in this market. And we're excited about what the future opportunities are. I was shocked, to say the least, when I started seeing the stats of the market and then started doing my own due diligence on the particular market. This market is Rapid City, South Dakota. It is home of Mount Rushmore. And again, I was shocked when I saw some of these statistics. Here's why we're really excited about this particular market. It's grown at 7 times the national average based on the US Census Bureau. And it's the fastest growing market in the Midwest. We're super excited about that. It's ranked number 4 in emerging housing markets, number 4th best place to launch a business, and was rated number 16 on the top 100 best places to live list. So it's got a great, it's really got a great environment for folks, both the indoor and outdoor, obviously, environment to a lot of hiking, a lot of exterior things, and then the local municipality is really investing in this area as well. I spoke a few slides ago about the affordability and making sure that household incomes in the area can support market rents. In this particular market, there's a big focus in their universities and colleges on like technology type jobs, and part of their average annual household income is 90,000, and that is pretty high compared to what we see in some of the other markets. At what our target market rent rate is for that area, that's 5.8x the typical lease rate, the market rent rate. So very robust from a affordability standpoint. A lot of opportunity there if the market continues to support that. And then I started to mention that the local officials. So some of the local officials, one of the gentlemen that's part of the Chamber of Commerce and the Economic Growth Movement actually came from Colorado. And he was a part of helping grow some of the markets in Colorado to, Colorado's exploded, right, in the last 10, 15 years. And so he's super excited. It started coming to Rapid City back in 2019 and really looking to grow this market as well, like he saw there in Colorado. So a lot of investment going on by the local municipalities. And then we're also seeing it at the state level for Rapid City, South Dakota as well. So that is the super top secret market. How to get involved. So as I mentioned, Wealth Navigators is really about a monthly forum to bring like-minded individuals together to talk and educate about investing in apartments and achieving financial freedom through apartments. If you think this is a right fit for you and your family's financial goals, there's a couple different ways that you can get involved. Certainly continue to join us on the Wealth Navigators. Our next one will be on September 18th at 3 p.m. Feel free to bring a friend, and that is 3 p.m. Eastern time. And if you're brand new here and you're not part of the Waypoint Investor Club, and basically what that means is it's a private investment club where we have an opportunity to look at investments for people that are interested in building wealth through apartments. If you're not in it yet, scan this QR code. Basically, all it means, it'll take you to a form. You can fill out the quick form. We'll set up time to talk. We're highly regulated by the U.S. Securities and Exchange Commission. So we're required, we need to have a relationship with each of our investors. So if this is something that you're interested in, feel free to scan the QR code. We've got a great resource there, 12-page ebook, and we can set up some time to get your questions answered and see if it's a good